Okay, let's be real. Right now, the market is absolutely buzzing about AI. You hear it everywhere, right? Once in a lifetime opportunity. And this whole vibe, it feels exactly like the late 90s when the internet was the new big thing. But we all know how that story ended, and spoiler alert, it was dramatic. So that leaves us with a huge question as investors today. You've probably heard this famous quote from the legendary investor John Templeton. It's one for the ages. See, every generation kind of falls into this trap. We think we've discovered something so new, so revolutionary, that the old rules just don't apply anymore. And today, with AI promising to change literally everything, you can hear that whisper everywhere. This time it's different.
So, just as a quick reality check, let's jump back in time. Remember 1998? People were throwing cash at anything with a .com in its name. It didn't even matter what the company did. For a couple of years, it was a total party. And then, bam, 2000 hit, and the bubble didn't just leak, it exploded. The Nasdaq dropped almost 80%. And get this, less than half of those hotshot .com companies even survived. Now, don't get me wrong, the internet was the future, but that didn't stop the hype from creating one of the biggest financial train wrecks in history.
And that brings us right back to today. The AI revolution? Oh, it's 100% real. But the big multi-trillion-dollar question for you, for me, for every investor out there is, has the hype gotten way ahead of the reality? Are we on the brink of a new golden age? Or are we just watching a rerun of an old movie? So let's dig into 3 big warning signs that might be driving this whole potential bubble. All right, warning sign number 1, what I'm calling the $330 billion arms race. It's wild. The fate of the entire market, and yeah, probably your portfolio too, is basically being decided by the spending habits of just 7 giant companies.
I mean, the concentration of power here is just staggering. We're talking about Amazon, Microsoft, Alphabet, Meta, Apple, Tesla, and of course, NVIDIA. These guys, the Magnificent Seven, now make up over a third, 36% of the entire S&P 500. Think about that. Even if you're just putting your money in a safe index fund, you're making a huge bet that these 7 companies are going to win this AI race. And the amount of money they're throwing at it is just insane.
So let's just run through the numbers real quick. You've got Meta planning to dump $60 billion into data centers and the metaverse. Then there's Microsoft, committing $80 billion to keep funding OpenAI and build out their supercomputers.
And Amazon, they're going even bigger. $100 billion planned for their cloud service AWS, basically trying to own the digital ground that everyone else is building on. You add all that up, and you get this absolutely jaw-dropping number. $330 billion in planned AI spending in 1 year. To give you some perspective, that's more than the entire economic output of countries like Finland or Portugal. A lot of people think this massive spending spree is basically propping up the whole economy right now. But that leads to the big question, right? How long can this possibly last?
And that massive spending spree leads us right into warning number 2, the AI money machine. Now, this one's a little more complicated, but it is so important to understand. We really have to ask, where is all this money actually going? Is the revenue we see on the books, is it actually real, or is it just being recycled? Okay, so let's trace the money here, because this is fascinating. Step 1, a giant like Microsoft invests billions of dollars into a hot AI startup like OpenAI. Step 2, what does OpenAI do with that cash? It turns around and pays it right back to Microsoft to use their cloud servers. Step 3, Microsoft books that as revenue and then uses that money to go buy a ton of super powerful chips from NVIDIA. And then, to complete the circle, NVIDIA takes some of its massive profits and invests it right back into startups like OpenAI. You see what's happening? It's a closed loop.
Here's a really simple way to think about it. It's called the hole digging analogy. Imagine I pay you $1,000 to dig a big hole in my backyard. Then you turn around and pay me $1,000 to fill that same hole back in. What just happened? Well, on paper, we both just generated $1,000 in revenue. But did we create any actual value? Nope. Now, of course, this is a simplified example, but it kind of shows how this circular flow of cash can let all these companies report really impressive revenue growth, which, you guessed it, sends their stock prices soaring.
And the company at the center of all this? NVIDIA. They are the ultimate shovel seller in this AI gold rush. I mean, their stock is up something like 1,600% since ChatGPT came out. It's just wild. But when you have a company that's investing in the very same startups that are its biggest customers, you have to ask the question, are they basically just paying their own customers to buy their products
And is that creating a kind of artificial demand for their chips? Okay, that brings us to our third and final warning sign. And this one isn't about tricky finances. It's about a fundamental, maybe even physical limit to how much AI can keep growing. It's this concept called the data wall.
So for the past few years, these AI models have been getting smarter at this incredible pace. And how have they done it? By basically eating the entire internet. They've devoured every book, every article, every blog post, every piece of research they can find. The stock market is basically betting that this insane rate of improvement is just going to continue forever. But here's the problem. Some researchers project that by 2027, that's just a few years away, these AIs will have consumed pretty much all of the high-quality human-generated data that exists online. In other words, AI is running out of food.
And this gets to a really critical difference in how things learn. An AI learns by just crunching a massive but ultimately finite pile of existing data. It's learning from the past. But you and I, we learn from interacting with the real world, from trying things, failing, having new experiences that generate brand new knowledge. AI can't really do that yet. So if AI hits this data wall and can't figure out a new way to learn, that incredible progress we've seen could slow to a crawl. And if that happens, those sky-high market expectations could come crashing down, and pop goes the bubble.
Okay, so after all that doom and gloom, I know what you're probably thinking. What am I supposed to do with my money? Well, the answer is definitely not to panic. It's about having a smart game plan. Because here's the secret. A potential crash can actually be a huge opportunity for you.
But first, let's just get one thing straight. This isn't a perfect repeat of the dot-com bubble. There's a really important difference. Today's big AI players, your NVIDIAs, your Microsofts, they have real products, they provide real value, and they have a much clearer way to make actual money. That's a huge step up from the 90s, where you had companies worth billions just because they had a cool dot-com name and literally nothing else.
Okay, so here's a simple 3-point survival plan. Number 1, keep investing. Seriously, set up an automatic monthly investment into a broad, low-cost index fund and just let it run. Don't try to time the market. Number 2, focus on increasing your income. Your income is the fuel for your investments. Go for that promotion, start that side hustle, anything to bring in more cash to invest. And number 3, diversify. You've heard it a million times, but don't put all your eggs in the AI basket. Spread your money around. Stocks, bonds, maybe some real estate, even precious metals.
And really, this all comes down to the most important lesson in all of investing. The real secret? It's simple. Don't panic. When, not if, the market falls, a crash can be the best thing that ever happens to your portfolio, as long as you're prepared. It's when everything goes on sale. It's the ultimate opportunity to buy great assets at a discount while everyone else is running around screaming.
So let's wrap this up. The AI hype is real, but the risks are very real too. That bubble, it could absolutely burst. So the only question that really matters is this. When it happens, are you going to be running for the exit with the crowd, or will you be the one who's prepared, ready to calmly seize the opportunity of a lifetime? The choice is yours.